Passing an evaluation is one of the most difficult things to do in today's era. So, in today's video, we're going to bring back Saturday statistics where we give you guys an insight on what the profitable traders are doing and what are the key metrics of those traders that are passing these evaluations and reaching to payout. All right, guys, so this is essentially Saturday statistics. We've done these in the past as well, and we're bringing it back for the new year. So, these are going to be the statistics for the month of December. Our goal is ultimately to kind of have our data analysts bring out all these different metrics of the traders that are doing well, passing evaluations, getting to payout, and then bringing back that data to you guys. We're big on data. We're big on ultimately providing you guys as much tools and resources in order for you to go ahead in your funding journey. So the month of December, I'm going to first of all break down the pass rates, as well as then kind of bringing down, the best pairs, the worst pairs, as well as key metrics that, people performed well on. When it comes to phase one during the month of December had a 28.7% pass rate. Now, across all the accounts, that was pretty much how people performed, which is pretty much has been kind of very similar to what we've seen throughout the last few months. Is around that 25 to 30% range in terms of passing phase one. Now, phase two obviously typically has a higher pass rate due to the fact that now you have to achieve less of a profit target, and that was a 44.8% pass rate. So ultimately, that puts us at a total pass rate for the month of December 10.4%. It's very important that we kind of give you guys the realistic view of the amount of people that actually pass the evaluations. Now, mind you, this is not the amount of people that have reached to payout. We'll have that. If you guys are interested in actually the traders that get to payout, let us know in the comment section. That's something that we can obviously bring up for you guys, and I'm pretty sure a lot of people will probably really enjoy that specific stat. Nonetheless, we want to give you guys a realistic expectation on how many people actually pass these evaluations. So we want to just have full transparency to our consumer. Now, the best performing assets during the month of December, which was actually very similar to the month of November, and that was USD JPY. And the worst performer was gold, which is kind of interesting because obviously they're kind of inverse assets. But nonetheless, we kind of had people pretty much performed well on dollar yen. And it's interesting because if we look at the charts, you can kind of see that there's, especially with the yen, there's been a lot of fundamental data surrounding the yen. So if I had to assume why people maybe perform better on it, it's probably because there was some sort of news driver going about it. Gold for honestly, like the way I'm not really a big fan of gold. A lot of traders are, and I think a lot of newer traders come into the market and they seek these really highly volatile assets. And I believe that could be a contributing factor on why gold, for the second month in a row, was one of the worst performing assets that we have at SFT. Obviously, we know that there's a daily drawdown and there's a total drawdown. And what's very interesting is that very consistently throughout the last few months that we've done this Saturday statistic, it's remained around 75%. So the exact figure when it comes to daily drawdown breaches is 74.72%. Is it also a part because now, obviously with equity-based drawdown, people are potentially holding trades into the new day. So maybe a lot of people aren't aware on how the equity drawdown is calculated. That's something that we kind of have to look a little bit further into. But now, obviously, with SFT, we do offer a balance-based drawdown as an add-on. So people that do want to hold trades into the new day without worrying about that equity drawdown now have the ability to just put that on the add-on during the checkout section. But nonetheless, I think ultimately what happens, and I've seen a lot of people, send DMs about this, and even looking through some of the messages on our support staff, I think a lot of people, what they do is they put their stop loss so close to, let's just say they're risking, let's just say the max daily drawdown is 5%. Maybe they're down like 3.5%. And instead of being more conservative and calling it a day, I see people, they kind of put enter and they risk that last 1.5%, which, you don't want to flirt with close to that daily drawdown. In my opinion, people should have maybe a 2%, maybe a 3% daily drawdown that they have set aside as part of the risk management. Like, hey, if I go down 2% for the day, I'm cutting it off with trading. I know it's very difficult. I know a lot of people have issues with that. And that's why we've also integrated our skilled protector. Our skilled protector is something on the dashboard where you can go ahead and actually put down your daily drawdown. So if you reach 3%, your account automatically closes up shop. And that way, you kind of save yourself. It's very difficult for us to stay disciplined. So we obviously want to provide tools to you guys at SFT in order to best utilize risk management and trade management as well. Now, what's an interesting statistic is that we kind of see on a month-to-month basis is, total trades per week for those that passed and for those that did not. And it's been very, very consistent, honestly. And I think it's very good as a business as well that we kind of have very consistent metrics month in, month out, because it obviously helps us understand our trader profile and different metrics that we can use ultimately to improve. Now, total trades per week is 5.57 for those that passed the evaluation. When you look at the people that failed, it was almost double that at 9.42. So essentially, it's around like one trade per day versus almost two trades per day on a consistent basis. And it's funny because we talk about this religiously, right? And different people as well in terms of influencers in the space. For example, like a Raja Banks, he always talks about one trade per day. He kind of made a little bit pretty popular when it came to his live streams. And I think that just kind of holds true in the data, right? We hear these cliches time and time again, but when we have actual data to back up these claims, then ultimately we can kind of use that to assess. Now, again, guys, these are just metrics of the overall average of the traders at SFT. You're going to have people who are outliers who can perform well trading multiple times a day, multiple times a week, and you're going to have people that are just, they don't necessarily fit the mold of this. This is simply us giving back to the community in terms of data from the average of the traders that are passing and failing, ultimately, so you guys can maybe make more informed decisions when it comes to your trading. You don't necessarily have to use this, and it's not saying there's only one specific way to trade. However, it's just an insight on what the people who are passing evaluations are doing fairly well relative to the ones that are not. And also, if you guys have any suggestions, let us know, because we can always pull out this type of data, and for the next one, maybe include extra things as well. Now, another thing that we've talked about religiously is the average hold time. The average hold time is actually higher for those individuals that passed versus the ones that failed. The average hold time is 2.86 hours for the traders that are passing evaluations versus 1.74 for the traders that are failing the accounts. And again, what can that be attributed to? Typically, the scalpers are going to kind of put the daily average hold time lower, right? So obviously if someone's scalping 5 minutes, 10 minutes, and I think this statistic shows that most people are probably not in tune with scalping, right? They're not going to be able to scalp appropriately and consistently, because with scalping, it's a different type of skill set. I talked about this so many times on my own channel. It requires a high level of focus. In my opinion, it requires a higher level of skill versus, holding those trades that allow you time to play out. In terms of the mental capacity, holding a trade, not messing with the trade, being with the higher time frame trend typically will serve others a little bit better. So I think it's kind of reflected in this statistic. Nonetheless, everyone's going to have different styles, and I'm not saying for you to hold, but it's very consistent month in, month out, even with the other Saturday statistics videos, that people that have a longer average hold time are typically performing better on these challenges. Now, the average risk to reward. Paladin has made it very, very popular when he talks about the 2-to-1 risk to reward. And again, for the fourth month that we've done this in a row, to capture all these statistics, it's typically around that 2R that people are performing the best. For the month of December, 1.95 RR was the average risk reward for those traders that were performing at the highest level. Now, when we compare that to the ones that were failing these evaluations, we saw a 0.56 risk to reward, which is less than a 1R. The reality is this: if you have a negative risk to reward, you have to have a massively high win rate. Now, is it possible? Of course. There's people that are going to be able to make it work, and there's others that are not. However, if you go through a losing stretch and you have a negative RR, it's going to be very difficult mentally to be able to really get yourself out of that drawdown. And statistically speaking, you just have to maintain such a high win rate, which we know as traders might be difficult, not because of just the skill set, but also because of the mental components that, we all are going to have at some point, where we're going to just take bad trades, right? We're going to have these lapses of judgment. So having a higher risk to reward kind of proves the fact that, it can kind of make up for a little bit of those trades that we take that aren't necessarily the most ideal. And again, for the fourth month in a row, that statistic has held true. I don't think that one's that shocking, because obviously we know higher risk to reward, typically you're making more than you're risking. If you can maintain a decent win rate, you're going to ultimately be in a very good position to make money long term. Now, in terms of transparency, we want to also set the expectation to people on how many challenges does someone typically take in order to reach a payout. That is essentially for the month of December was 3.77. And we compiled this data over across how many people were purchasing challenges multiple times. And yeah, that's the average statistic. 3.77 challenges purchased before reaching a payout. So again, guys, this is why I consistently tell people on my own channel as well, and even people who message me in regards to purchasing challenges. If you, let's just say you have a $500 budget, then in my opinion, it might be better off to maybe split that money and then buy multiple challenges. So you buy multiple smaller accounts versus trying to, like, you know what does $500 buy me in terms of the highest account? Because the reality is this: most people are not passing these evaluations right away. It might take a little bit of time. And then obviously if they reach the phase 3 in terms of the final stage of funding, now they're eligible to kind of receive these payouts based off their performance. So it's very important to kind of, if you have a budget per month for challenges, make sure to split it where you're not putting it all on one challenge, because again, the data shows majority of people are taking multiple challenges before they finally reach that payout stage. And that kind of leads me to the final statistic for the month of December, where the average payout was $2,228. And that was pretty much across for the month of December. Obviously, this is going to have a variance because we have traders who are making maybe $100, $200 versus a trader who's making maybe 20,000. So the average payout across the board was around $2,200, which again, which is pretty much double our highest challenge offering. So it goes to show that, you know, the average payout, depending on the individual, can actually have a solid return depending on their performance. Now, nonetheless, guys, those are the stats that I have for you guys for the month of December. We're going to do this every single month. So make sure that you're subscribed and make sure to join the Discord in order to get live updates on everything we're doing at SFT and whenever these videos go live, as we do run these types of giveaways on free accounts during the release and the premiere of these specific videos. So check out the other videos that we have on the channel, especially our Trader Wars, which is one of the very more popular videos on the channel. Over 150,000 views, people loving it, good entertainment. Check that out. And until next time, I'll see you guys in the next video.